Good morning, everyone, and welcome to today's ABx Group Investor webinar. I'm David Taskin. I'll be moderating today's session. Joining us is ABx Managing Director and CEO, Dr. Mark Cooksey, who will provide an update on ALCORE's hydrogen fluoride technology and construction of the continuous pilot plant in northern Tasmania. You can submit questions at any time through the Q&A function, and we will get to those at the end of the presentation. We will allocate 10 to 15 minutes to answer questions, and we'll get through as many of the questions we can. And we have had some questions already submitted, so we'll work on those as well. So I'd like to now introduce Mark Cooksey, or Dr. Mark Cooksey, Managing Director and CEO of ABx Group. Mark, over to you.
Great. Thanks, David, and welcome to everyone on the webinar. And I'm excited today to give you an update on both the commercial and the technical progress on our ALCORE project. Next slide, please. And the next one. So firstly, the fluorine market, why are we looking at this? And so this graphic shows for fluorine chemicals are widely used. Big existing markets are things like refrigerants, aluminium fluoride, which is an essential chemical for aluminium smelting, and polymers. And then there's a big growth market in batteries. So although batteries are only 5% of the fluorine market today, that's expected to grow to over 20% in the next 5 to 10 years. And there's lots of different battery chemicals that need fluorine. Most fluorine comes from fluorspar. That's the ore you mine. But the critical intermediate is hydrogen fluoride, highlighted in the middle there. So all fluorine chemicals basically come from hydrogen fluoride, and virtually all of that comes from fluorspar. And you can see on the right some examples of indicative fluorine prices. These are publicly available, or hydrogen fluoride prices, so well over US $2,000 a ton. Okay, next slide. And so the little graphic at the bottom shows the way that hydrogen fluoride is made today. So you take acid spar, which is high-grade fluorspar, and you react that with sulfuric acid, and you produce hydrogen fluoride and a byproduct, actually gypsum. And the ALCORE process shown in the bigger graphic, it's similar in that it's still using sulfuric acid, but the difference is instead of using fluorspar, which you have to mine, we're using this byproduct from aluminium smelting called aluminium smelter bath. So it's actually solid granules, and it's a sodium aluminium fluoride. So instead of using fluorspar, which is calcium fluoride, we're using sodium aluminium fluoride. And this material is now in surplus in the aluminium industry, and so very likely that we can get it, at low cost. And the really good thing, I've been doing process development like this for 30 years. The really good thing about this one is it's not completely new. As I said, it's an adaptation of an existing process, which means there's enough new stuff that you can protect the IP, but it's not completely new in such there's risks you might not have thought about. So a good example in this case is materials of construction. The materials that are used in the existing process, we can use a lot of those in our process. We don't have to invent them or study which ones are the best. Okay, next slide. And what that means economically, so there's two graphics here. The one on the left is showing an indicative comparison between the existing process and the ALCORE process. So left-hand column shows indicative operating costs of producing hydrogen fluoride using the existing process. And you can see that in green, the fluorspar, the ore, that's roughly 40% of the cost. And so on the right-hand column of that left-hand graphic is our process, that because you can get the aluminium smelter bath at a much lower cost, I've put a nominal small cost there. The other costs are relatively similar, therefore your total operating cost is a lot lower. And then to put some numbers on that, and this was our announcement just last week, those three green columns are for different scenarios for our technology, with the key variable, the cost of the aluminium smelter bath. So on the right is if we had to pay a relatively high price for it. Even then, that's still a big operating margin over the indicative HF price shown in the dotted line across the top. And there's definitely prospects from we're talking to all the aluminium companies about getting the bath at lower cost. And you can see, say, on the left-hand green column, the operating margin's basically like 100%. So, these figures are, they're reasonably robust. Obviously, things can change, but starting with that size of operating margin gives you really good prospects for a commercial project. If your sort of expected operating margin 10%, obviously a little bit of change can be difficult, whereas we've got a big window of opportunity here. Okay, next slide. Oh, and sorry, what that means is that our hydrogen fluoride production would be in the lowest quartile of global hydrogen fluoride production costs today. Okay. Okay, so where are we up to? If you've been keeping up to date with our announcements over time, we've done the laboratory work in our original facility in New South Wales. We then did what we called a batch pilot plant where we were using about 3 kilograms of bath, and those results were very good. It showed that we could recover almost all of the fluorine out of the bath and turn it into hydrogen fluoride. So really that says the process works in a chemistry sense. And now we've got to show that it works in an engineering sense and refine that design so that we know exactly what design the larger commercial plant should have. So we're in that middle of the 5 at the moment, the continuous pilot plant. We're building that pilot plant now in Tasmania. So this is in a building leased from Rio Tinto, and that will process nominally 20 kilograms per hour of bath. And so 2 key things. One, the results will help us design the larger plant. And 2, it'll generate production sample or product samples that can be evaluated by customers. The plan is to build a commercial plant in Tasmania. If we skip to the very right-hand side, normally at the moment our plan is 20,000 tonnes a year of hydrogen fluoride. If the continuous pilot plant goes really well, we would go straight from box 3 to box 5 because we'd say the scale-up risk is okay. The pilot plant performed exactly as we expected. If there's a little bit more uncertainty, we may do this commercial stage 1 in between. So we've left it there to be conservative in the planning, which will then de-risk the process further before building the largest one. Okay, next slide. And so just some graphics and detail about the continuous pilot plant. So you can see in the left-hand image, that's an aerial view of the Bell Bay smelter in Tasmania. So it's a Rio Tinto smelter, first smelter in the Southern Hemisphere. And it's typically the smelter where Rio Tinto Aluminium Australia does their development work. And so they already had a pilot building. You can see in the top right of circled of that left-hand graphic, which they've leased to us at a very reduced rate. And you can see that in the middle. We're also, the Tasmanian government has said, and we can have a $1 million conditional loan, which is a loan that's repaid when we commercialise, or it's written off if for some reason we're unsuccessful. We haven't actually got that money yet. That's very close. We're just finalising the terms. And then on the pilot plant itself, you can see an internal view of the building on the right. So that's showing about 2/3 of the building. You can see, if you look closely, you can see some equipment's arrived there. So equipment started arriving. The environmental effects report, we'd submitted that. We got a response from the EPA with some queries, which we've now responded to. So that's moving all according to plan. Civil works have now commenced, which, there's not much. As you can see, that building's already pretty good. There's a little bit of concrete and stuff to be removed outside and some awnings to be placed to cover some storage tanks. And there's some bunding to put in the internal building. That's work's happening now. As I said, equipment's being delivered. The key reactors are being manufactured, and they will be starting to deliver from the late Q3, beginning of Q4 through to very early next year, and expect to start commissioning beginning of Q2 next year. The key thing on the timing is making this safe. The expectations, rightly, of both ourselves and the community are that these operations like this are safe. Any chemical process has some hazards. And so that takes some time, and there's complexity in we're managing manufacturers overseas, our consulting partners, B-Fluor Chemicals, they're based in South Africa, and now our Australian engineering partners like Kempe Engineering, they're for mechanical and electrical engineering, and coordinating all those and making sure we get to the right decisions about keeping it safe. That does take some time. Okay, next slide. And so to remind everyone, the vision here is on the left. Number one, build a commercial plant to produce hydrogen fluoride um, and aluminium fluoride, which then goes into the aluminium smelters. And then there's two pathways to expansion. One is you duplicate that same plant overseas in other locations. So, for example, around other major aluminium smelting areas where there's plenty of this excess smelter bath available. And the other growth pathway is value adding. So, I said at the beginning, hydrogen fluoride is used for all these fluorine chemicals. Well, currently Australia doesn't make any of these fluorine chemicals because it doesn't have any hydrogen fluoride. There's a whole commercial pathway there. And a good example is to make rare earth metals, you actually need rare earth fluorides first. And to make rare earth fluorides, you need rare earth oxides and hydrogen fluoride. So we're even having discussions with the rare earth industry. Interestingly, of course, which where ABx is part of, but about can ABx and ALCORE be the supplier of rare earth fluorides to the Australian rare earth industry that's trying to make rare earth metals. So that's just a good example. Okay, next slide. And that's just a schedule for you to look at. As I said, continuous pilot plant scheduled to be commissioned beginning of Q2 2027. We'll run that, and the ideal scenario is that within a few months you're going, yes, this is working as expected. We are now starting to think about properly designing the larger commercial plants, which we're already thinking about. The whole point of the pilot is to de-risk the technology. The history of process development is littered with examples of projects that have gone too big too fast. A famous one is BHP itself about 20 years ago built a hot briquetted iron plant in Port Hedland. It cost $1 billion, and after about a year or so, they gave up, couldn't get it to work because they hadn't done enough piloting. And yeah, it was a disaster. So we are not going to make that mistake. So we're always trying to balance between rightly going as fast as we can, but also making sure it's going to work. We're constantly balancing those drivers. Okay, next slide. And so now this is a video, just a 1 minute, showing the pilot plant. So you can see our building in the front with the Bell Bay smelter behind it. That's also an aluminium powder plant just to the right of ours. It's another internal view. It's a really perfect building for us. When Rio Tinto said, "Hey, would you like this building?" And I've actually done work in this sort of in a past life. I was like, "This is perfect." So this is an Australian Aluminium Council visit to our facility a few weeks ago, or a couple of months ago. That's two of our new engineers that we've recruited. So it's really good just to have the Aluminium Council visiting, of which we're a part of. They're really excited about two things. One, us being able to produce aluminium fluoride, which gives more security of supply to the Australian aluminium industry, and also then the value adding, showing that normally when you do something like that, then you also create other opportunities. So one of the things we're really positioning the Australian aluminium industry, this is to government, is to say it's a fantastic industry in itself. It's Australia's major metal industry that goes from mine to commercial products right through to extrusions. But not only that, it creates opportunities for other industries like downstream fluorine chemicals. Okay, thank you. And so thanks for your time, and hope that was useful to give an update, and happy to answer any questions that the audience may have.
Thanks, Mark. Great presentation, and it's always great to see visually what's happening down there on the project. As touched on in the intro, we'll now move into the Q&A session, and we will answer any questions that have come through. As I said, we did have a couple come through from people who weren't able to make the session, so I might jump straight into those. You touched on it in your presentation, but how significant are the recent economic results for Alcor?
I think very significant. I mean, we sort of knew it ourselves, but it was like we want to communicate this to the market, and so we made sure the numbers were robust. Um, I think the whole key thing here is that the hydrogen fluoride market is already existing. We're not having to create a market. Um, Fluorspar is 40% of the operating cost, and getting harder to get. The cost is going up. I mean, there's forecasts of the price going to $900 a ton, let alone the current $500 a ton. Um, and our process, there's a lot of similarities, except the raw material we can get for much less than $500 a ton. You know, you don't, I've been doing this for 30 years. You don't often get that combination of an existing market and an opportunity to supply to the existing market at a much lower cost. Like I love it, basically. So I think it's very significant.
And in terms of operating costs, should investors be expecting those to be higher during commissioning and early production?
Um, Probably slightly. And yeah. So with scale, as you go larger in scale, your operating costs typically do come down a little bit. But again, the whole advantage or compelling advantage that we have is with that large operating margin estimated, even if it's like a little bit higher during commissioning, an early stage, you still got a good operating margin. And that, like my point earlier in the webinar, if your forecast operating margin is 10%, you don't have much room to move. But if your forecast is 50% or 100%, you've got a lot more flexibility, and that's what we have.
Um, what other products or markets could hydrogen fluoride open up for Alcor?
Yeah, so I mean, I mentioned one, which is rare earth fluorides. Another really interesting one is to make high purity quartz. You find some good quartz and you mine that, but then you actually need a lot of hydrogen fluoride to remove the impurities out of that to make super high purity quartz, 99.999%. And there's companies in Australia proposing those projects. So we're in discussions with them because their base case is to import hydrogen fluoride, uh, which is challenging economically. Hydrogen fluoride, because it has some hazards, the freight cost is substantial. So that's a really good example. And then there's all the I guess traditional applications like refrigerants, and then the new ones like battery chemicals. And in fact, around the world, a lot of the major hydrogen fluoride producers are actually fluorine chemical producers as well. So, for example, in the US, there's a company called Solstice, which has just been spun out of Honeywell. Everyone really there knows them as a fluorine chemical producer. Actually, they produce their own hydrogen fluoride as well, just as the feedstock. So that's the possibility for us.
If the pilot is successful, is there any intent to license the technology to other partners?
So that's one of the options. The intent clearly is to build a plant in Australia, Tasmania, and then build other plants overseas. The commercial model for that is to be worked out. Again, we're in discussions with global parties about the technology and that commercial expansion strategy. So licensing it could be one way, or it could be that that we build our plants. I mean, I think it'll just be it depends a decision depending on the right commercial strategy at the time.
Now, just touching on what you mentioned there, there's a question here about level of interest from potential customers and industry partners, and in particular Rio Tinto.
Yeah. So yeah, we're talking to all the aluminium companies, including Rio Tinto, and we recognise that we've been saying for a few years, oh, we're working closely with Rio Tinto, and so far, they've leased us a building. We're talking about now elevating that relationship, making it more binding, for example. So those discussions are happening. Talking to the other aluminium companies, I had a couple of them the other day go, "Hey, Mark, we need to do a catch up on where you're up to. And then I've sort of been talking about in this webinar, if you go back 3 or 4 years, we were only talking to the aluminium companies because we were talking about aluminium fluoride. That was our focus as the product and the customers. And what we've recognized now is that's not the only one. So we're also talking to hydrogen fluoride customers as well. So actually, the challenge almost is um, having the capacity to follow up with all the opportunities that we're generating.
Um, Might be a bit of a blunt question, but why has the pilot plant taken longer than some investors expected?
Yeah, it's good. Yeah, good question. Fair question. Something we reflect on. Been doing this for a long time, and my team, they've also been involved in process development. And on reflection, it's two things. One is the safety. Not that we weren't planning to be safe from the beginning, but the work required to make sure it was safe, and to a good standard. I mean, you could build it sort of quick and dirty a bit more, but we decided that was an unacceptable safety risk. So that's then meant there's been more work required and taken a bit longer. And likewise, the complexity of managing Australian and multiple international partners. Again, it just can take some time. If a new issue is identified and you need to have, a call with these people and these people and these people to reach a decision, if that takes, 6 days instead of one day, I mean, that can affect the time. So again, I don't, it's not unusual for these things to take longer than planned. I mean, that's not really the ideal reasoning. But what we always ask ourselves is, are we doing the right strategy today with what we know and learn from the past? Could we have made any different decisions? I don't think we could have done it any faster than we're doing, apart from if we had a much larger bucket of money, maybe we could. But with the resources we had available, I actually think we've done very well to get to where we are now. So I think the team can be very proud of that.
And what does the pilot plant, apologies, still need to prove?
So the key thing is the engineering, which I mean things like, okay, when you run this process continuously, uh, does it continuously produce product that meets specification, or because when we ran our batch process, it only runs for a few hours, so you've got to know that it'll do it reliably over time. Um, it'll show things like, can we keep getting the material through the reactors, or over time do things build up and maybe jam it up? Um, and it's things like, how long does the material need to be into the reactor? So we might say, look, we're pretty confident it's you know a few hours, but to design a commercial plant, you've got to decide, is it 2 hours or is it 4 hours? Well, 3 hours. And because that dictates the size of your reactor. You can't just sort of guess, because you either end up spending building a reactor that's twice as long as you need, an unnecessary cost, or you build one that's too small, too short, and you can't get the full product. So it's refining the knowledge that we've got already to make sure we can design the optimum commercial plant.
And I've had two questions come in, but I'm going to join them together. So is all aluminium smelter bath the same, or does the material vary between smelters? And secondly, could the ALCORE process be replicated at aluminium smelters around the world?
Um, I'll do actually the second question first. So the alcohol process can be replicated around the world. You Based on the volume of surplus bath that a typical smelter produces, you wouldn't put one of our plants at every smelter, like that. They'd be too small, they'd cost too much. It's better to put one in each regional location, which is like why we'd say put one in Australia that would take the bath from all the smelters in Australia and New Zealand. So then likewise, you could put one in the Middle East, take all the bath from the Middle Eastern smelters, and one in Quebec, etc. Um, it's a really interesting answer to the first question, is all bath the same? So first answer is yes. So the smelters around the world over decades have converged on a very similar composition for the ideal bath electrolyte that's used to make aluminium metal. I could reel off the numbers as, it's cryolite with X% aluminium fluoride and X% calcium fluoride. It is actually very consistent. So if you take that excess out of the pots and then send it off site, which is what smelters do, that material is very consistent both between smelters and over time. And that's all our test work has been on that material. Sorry,
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 David.
sorry, David. In addition, though, smelters also run into operating problems sometimes. And, things go a bit haywire. And what they end up with is piles of material that we call mixed material that's bath and other stuff. Maybe it's got more alumina, maybe it's got some carbon in it. That material varies between smelters because they've all had their own process deviations. And we're starting to look at that material because smelters have even more problems in getting, selling or disposing of that material. So it's another big opportunity for us.
And just touching on that, how important is that opportunity to process mixed smelter material?
I think it takes it from being it's hard to say. I think what we've got already is a great opportunity, even better than that. Um, but the amount of surplus good material is, not limited, but it's a finite amount, right? So like we couldn't supply the whole global Australian hydrogen fluoride market from that. Maybe a few hundred thousand tons available of that per year, which means we could build, 10 ALCORE plants of the size we're talking about. But the mixed material, we're trying to actually put a handle on it. I don't know if it's, or we don't know yet if is it the same amount again of material or is it 3 times as much? Like I said, this could really, like the cream on the cake, right? It could turn it from a great opportunity to just an unbelievable one. But of course, to be clear, it's probably going to be more technically difficult to process that mixed material. You're going to get different reactions happening in the reactors. So we're just planning now to start that small scale work on that. So I view it as it's not essential at all to make this project work, but it'll be a fantastic bonus if we can get it to work as well.
And just a question here in terms of the first commercial plant, assuming the pilot plant is successful, how do you think that would be funded?
So our real focus now is on engaging with strategic investors. So by that I mean investors that care, like are in the value chain. So that can include aluminium companies like Rio Tinto. It can include other customers for hydrogen fluoride. It can include companies that build hydrogen fluoride plants. We're talking to them as well. So the idea would be to get significant financial support investment from them, um, and which then leverages all sorts of other investment, whether that's institutions or retail shareholders, and also federal government support. You can see rare earths are a good example that the federal government, through things like Export Finance Australia, is giving significant, they tend to give like low cost loans. But that's when you've already, well, ideally that's in combination with strategic investment. So that's the model being pursued.
Um, Another pretty open question, but what do you think investors may be underestimating about Alcor?
I think they're underestimating that we're going to do it. I think they're thinking, this idea sounds okay, and you've been going at it a while, but we hear of lots of companies uh, dabbling in stuff. Is that just a thing to try and get people excited and bump your share price? It's like, no, like I say, I've spent 20 or 30 years doing process development. I'm motivated by building better processes for all the industrial materials we need. Um, and so is my team. Like that's the people we've recruited. Like we're going to do this, and the odds are really good because of the uh, factors I've outlined. We don't have to invent a market. This doesn't have. There's not a super high product specification. It doesn't have to be super pure. And the idea we've got to use the smelter bath makes a big difference to the operating cost and we've shown it works technically. Like that, like you don't get that often. So yeah, I think people might think, oh, this will this really happen? Yes, it's going to happen. It's taking some time, yes, but we're going to make it happen.
Last question. What should investors watch from ALCORE in particular over the next 12 months? What are the milestones that are going to move the dial?
So I think there's two threads to it. One is on the technical side, the construction and then commissioning and successful operation of the pilot plant. I expect to be, we do a webinar on the 17th of July, 2027. I expect to be saying we've commissioned the pilot plant, um, and it's producing HF as we expect, right? That's the opportunity. And on the commercial side, it's a bit more unpredictable, but we're having, deep engagement with lots of companies, like I've talked about, aluminium fluoride consumers, hydrogen fluoride consumers, suppliers, technology providers in the fluorine industry. I'd hope to be able to announce, achieve commercial progress and announce those over the next 12 months. You know, it's frustrating on that side of things because you can make lots of progress, but you can't announce anything until it's something significant. And so sometimes that's a bit of a binary outcome. We expect we'll get it, but time will prove it.
Mark, thanks for the update, and thank you to everyone who joined us and submitted questions. Mark, first of all, as I said, thanks for the update, but also throwing yourself in and answering all the questions that came through. There was quite a few, some easy, some hard, but all there dealt with accordingly. So thank you, Mark. Thanks for your time in the presentation.
Great, thank you, and thanks for hosting it, and thanks for all the people that attended. You can tell I love talking about it, so this is I actually enjoy it. Yeah.
A recording of today's webinar and the presentation will be made available following today's session. For further information, please visit the ABx Group website or contact the company directly. Thank you, everybody, and have a great day.